Hello students. So today we take up with question number 10. We are very close to the completion of chapter. See that all of you understand the things properly and mark this question as very important question. Okay. This question is, you can say, one of the most important questions because it will cover almost everything done in this chapter, even more important than the previous question 13. Last lecture's question 13 and question 10, two things if you revise properly in your exams, everything will be covered in that. Look at it. Tepro Limited issued a prospectus inviting applications for 40,000 shares of rupees 10 each. Means company has issued how many shares? 40,000 shares. Now it issued shares as follows. 1,000 shares were issued at par to the vendor for purchase of machinery for business operations. So this is issue of shares for consideration other than cash. You all must be able to remember the point done in that. What is the entry to be passed? We used to pass two entries. First entry, machinery account debit to vendor account, 1,000 shares are issued, means its value would be 1,000 into 10, 10,000. And second entry, vendor account debit to share capital account. We will pass a combined entry here and we have done it earlier also. Machinery comes in, debit what comes in, machinery account debit, shares goes out, credit what goes out to equity share capital account directly with 1,000 into 10, 10,000. 500 shares were issued to promoters of the company at par for the services rendered by them. This also we have covered in the past lectures. If shares are issued to promoters, then you will debit which account? Goodwill account. So what will be the entry? Goodwill account debit to equity share capital account, 500 into 10, the value would be 5,000. Okay. Why are we issuing the shares to the promoters? For the goodwill of the company, for the reputation of the company. They have rendered the services, so we give them some shares free of cost. All this is discussed in detail in past lectures. And then these 40,000 shares of rupees 10 each are issued at premium of rupees 12 payable as follows. So these are the ones issued for cash. So before we solve the question, first we will have two extra journal entries for issue of shares consideration other than cash. And then we will have regular entries of issue of shares for cash. 2 of application, 15 including premium of allotment. So out of this 15, premium is 12 rupees and remaining amount towards the face value is 3 rupees. First call 3, final call 2, you can cross check. 2 plus 3, 5 plus 3, 8 plus 2, 10. That makes the face value of 10 rupees. Applications were received for 60,000 shares. So over subscription, 40,000 are issued, 60,000 applications received. And allotment made on pro rata basis to the applicants of 50,000 shares, category 1. Okay, in third column, applications received 50,000 and second column, applications received 50,000. Fourth column, how many shares can we allot? Only 40,000 shares what are issued. So category 1, 50,000 applications received, shares allotted 40,000. And remaining applications were rejected and application money was refunded. That is category 2, balance category. Okay, remaining balance category. Money overpaid on application was adjusted on account of sums due on allotment. So in this question also, either you don't make call account column, or if you make it, it will remain blank. Because as per the language, adjustment will go only till allotment. After that, any surplus will not remain for call or refund. Mr. Preet, to whom 1600 shares were allotted, failed to pay allotment money, and on his subsequent failure to pay first call, his shares were forfeited. Calls in arrears. And since they are forfeited after first call, go reverse. 10 minus 2 of final call, called up capital is 8 rupees. Okay, I told you the easier method, go reverse. 10 minus 2 of final call up till first call. What is the called up capital? 8 rupees. This is similar to question 13 what we did. One shareholder who has not paid allotment and call money. Since allotment money is not paid, adjustment will be there in allotment. You all must remember this surplus calculation will have to be done. Mr. Meet, the holder of 800 shares, failed to pay the two calls. Means he has not paid first call and final call. So Meet will not come in this surplus calculation because our adjustment won't go up till call. You all must be able to understand this from past lectures now. And his shares were forfeited after the second call had been made. So here the called up capital will be complete rupees 10. Forfeiture done after second call. Of the forfeited shares, 2000 shares were reissued. Now 1600 plus 1800, 2400 are forfeited, but only 2000 are reissued to Mr. G, credited as fully paid for rupees 9 per share against 10. 9 is the reissue price, so discount is 1, and the whole of Mr. Preet's shares being included. Means in this 2000, Preet's 1600 all shares are included and remaining 400 are of Meet. Out of this 2000 shares, Preet all shares being included, whole of Mr. Preet's shares being included, means in this 2000 all 1600 of Preet are reissued, so remaining 400 are of whom? Meet. In short, Meet's all the shares are not reissued. Out of 800 only 400 are reissued, and Preet's all the shares are reissued. This will help us in working note 4. We always divide that in two categories, reissued and not reissued. So Meet's 800 shares we will have to divide in two parts because 400 are reissued and 400 are not reissued, and that will in turn help us in calculating the amount of profit. Okay. Further, company transferred unpaid money to calls in arrears account. Every question this sentence is given. That's why we have calls in arrears in our entries. Pass necessary journal entries in the books of company. Let's start with the workings. One piece of advice. Pause the video, come on, and try the workings on your own. Then play the video and check it. Now it's almost the end of the chapter. You all must be able to do the questions on your own. So advisably pause the video, try on your own, and then play and verify could you get it correct or not. Just don't play the video and copy the things, okay? Try on your own, then play the video and verify you're able to get it right or not. So 4 installments: application, allotment, first call, final call. Amounts: face value 2 of application, allotment as we have done, face value 3, premium 12, total 15, first call 3 rupees, final call 2 rupees, total 10 plus 12, 20. 22. Now calls in areas, we have 2 people. Okay, one is Preet, the other is Meet, and then total. Preet 1600 shares failed to pay allotment, and on his subsequent failure to pay first call, his shares are forfeited. So Preet has not paid allotment on 1600 shares, first call on 1600 shares, and then the shares are forfeited after first call. Then Meet 800 shares failed to pay the two calls and his shares are forfeited. So 800 shares, Meet has not paid two calls. First call, final call, and after that forfeiture. Similar to question 13, so all of you must be able to try on your own. 1600 call scenarios in allotment, 2400 in first call, 800 in final call. Okay. Now, second workings called up capital. We will do it one by one for both the persons. Okay. So first we find called up capital of Preet and then of Meet. So Preet, after first call the forfeiture is done. So I told you 10 minus 2, 8 rupees per share is called up capital for Preet. And Meet, the forfeiture is done after final call. So called up capital is complete rupees 10 per share. Third workings of pro rata allotment. Wherever required, pause the video, make the columns, then do it. And advisably, pause the video, do the entire workings on your own, and then play and verify you got it correct or not. Two categories are there. Second is the balance category. First category here, allotment was made on pro rata basis to the applicants of 50,000 shares. So number of applications received 50,000. Now pro rata, how many applications shares can be allotted? 40,000 are issued, so only 40,000 can be allotted. Total how many applications are received? 60,000. 60,000 minus 50,000, balance category 10,000. Now remaining applications, see here, remaining applications were rejected and application money was refunded. So this 10,000 shares, no shares are allotted, applications, no shares are allotted, total 40,000. Now this we will multiply with application 2 rupees, as well as column 4 we will multiply with application 2 rupees. 50,000 into 2, 1 lakh. 10,000 into 2, 20,000. Total 1,20,000. 40,000 into 2, 80,000. Nil, total 80,000. Now here you will have to leave space for whom? Here you will have to leave space for Preet, because Preet has not paid allotment. So as we have been doing in past questions, Preet's calculation will come here. So here you write down surplus of category 1. How do we find the surplus? Column 3 minus 5. So 1 lakh minus 80,000. In category 1, there is a surplus of 20,000. Now compare it with allotment money due. How much allotment money is due? Total 40,000 shares are allotted and allotment is 15 rupees. So 40,000 into 15, lot of money is due, 6 lakhs is due and only 20,000 is the surplus. So whichever is lower amount, that is to be adjusted. Which amount will you adjust? 20,000. And after that no surplus will remain for further adjustment. Okay. Now, I have been telling you this in past questions also. Okay, this 20,000 of second category entirely we have to refund because no shares are allotted. So 20,000 adjusted with allotment, nothing with call, 20,000 refunded. Now I have been explaining you in past questions. Can we say in final call the calls in arrears are 800 into 2? Yes. Can we say in first call the calls in arrears are 2400 into 2? Yes. Can we say in allotment calls in arrears are 1600 into 2? No. All of you must remember this now. Why no? Because this 1600 shares of Preet have not paid allotment money, means this 1600 are part of this 40,000 shares. So even in this 1600 shares, some surplus is going in allotment. So entire 3200 is not called in arrears. I told you this shortcut earlier. If in allotment there is an adjustment and in allotment there are calls in arrears, then you have to calculate below this pro rata the amount of calls in arrears. So here we will do it for Mr. Preet. How will we do it? 1600 shares are allotted. Now, when 40,000 shares are allotted, 50,000 applications are received. So 1600 shares allotted. How many applications would be received? Cross multiply and divide. 1600 into 50,000 divide by 40,000. Okay, 1600 into 50,000 divide by 40,000 means 2,000. 2,000 applications would have been made. Now 2,000 applications means Preet paid 2,000 into 2, 4,000 rupees. But he was supposed to pay 1600 into 2, 3,200 rupees. So surplus of Preet. Okay, surplus of Preet. 4,000 he has paid minus 3,200 was due. Same calculation, 3 minus 5. Surplus of Preet is 800. That 800 will get adjusted with allotment here. So entire amount cannot be called in arrears. Now what is allotment money due from Preet? He is allotted 1600 shares. Okay, Preet is allotted 1600 shares. 15 rupees of allotment money. So 1600 into 15, is it 24,000? Yes. So 24,000 is due. 800 gets adjusted. So remaining 23,200 are only calls in arrears. Okay, calls in arrears are only 23,000, not only but many, 23,200. 800 only gets adjusted. Lot of practice is done, so I hope everyone is able to follow this now. Many questions are done. Amount forfeited. Wherever you don't follow, you can pause and repeat the video. Okay, rewind the video. Amount forfeited. Now I told you earlier we'll find it separately for Preet and Meet. Now regarding Preet, as we have already done the calculation below the pro rata, directly you will take the amount from here. He paid 4,000 rupees and that itself is going to get forfeited. So for Preet directly 4,000 rupees. You cannot cross multiply for Preet 1600 into 2 because he has not only paid 1600 into 2, 3,200. He has also paid 800 of allotment, which was the surplus money. So 3,200 of application plus he has also paid 800 of allotment. That also comes to 4,000. Directly take from here 4,000. For Meet, traditional calculation. What traditional? Meet is not included in this calculations here. So Meet 800 into cross multiply. 2 plus 3, 5. Okay, Meet has not paid first call and final call. Means he has paid application and allotment. So 2 plus 3, 5 rupees he has paid. So 800 shares into 5 rupees, 4,000. Now this 4,000 you will divide in two parts as we discussed here, because Meet only 400 shares are issued, 2,000 shares which are reissued include whole of Preet's shares 1,600 and remaining 400 only of Meet. Sort of 800 shares reissued are 400 shares. Not reissued are remaining 400 shares. So same amount 5 rupees. How much will be on reissued 400 shares? 2,000. And not reissued 400 shares? 2,000. This bifurcation will help us in calculating the amount of profit. Okay. Now you all can pause the video and make the format of TEPRO Limited's entries, and advisably don't only make the format, solve the question. We have done a lot of practice. Don't forget this two extra entries in the beginning. So two entries of this, then two of application 3, 4, allotment 5, 6, first call 7, 8, then 4 feature of Preet 9, then 10, 11 final call, then 12 4 feature of me, 13 reissue, 14 profit. 14 entries only are going to be there. Okay, so all of you pause the video, try 14 entries on your own advisably, then you play the video and see whether you got it correct or not. Okay, this should all be practiced on your own now. Yes, so all of you should have done the formats. Let's take up with the entries, and all of you, quite many of you should have tried the entries also on your own, so you can verify whether you have done it correct or not. Okay, now be attentive. First entry is for issue of shares for consideration other than cash. So 1,000 shares were issued at par to the vendor for purchase of machinery for business operations. So machinery comes in, debit what comes in, machinery account debit, and shares goes out, credit what goes out. So do equity share capital account. Amount 1,000 shares are issued, 10 rupees is the value, so 1,000 into 10, 10,000. Okay, the shares of 10,000 are issued, means machinery also would be of 10,000 rupees. Being 1,000 shares issued against purchase of machinery. Now second entry, issue of shares to the promoters is there. See, this 500 shares were issued to promoters of the company at par for the services rendered by them. So for issue of shares to the promoters, goodwill account debit to equity share capital account. What is the value of shares? 500 shares, so 500 into 10, 5,000. Being 500 shares issued to promoters. Then now we start with this regular entries of issue of shares for cash. Okay, in that bank is the receiver, debit the receiver, so bank account debit, and Temporarily, we transfer the money to equity share application account. Amount we directly get from the workings of pro rata allotment. Okay, column number 3. Total application money received is 1,20,000. Being application money received. Fourth, now transfer of application money, the long entry, equity share application account debit to equity share capital account to equity share allotment account Now we don't have any adjustment with calls in advance, so calls in advance will not come, it is nil. Directly the refund to bank account. Which amounts will be taken? You all know this. 5, 6, column 5, 6, 7 and 8. Seventh column is not there. Amounts are not there, so 8. Equity share application account you will debit and close with full amount 1,20,000. Equity share capital with fifth column 80,000, allotment 20,000, sixth column refund 20,000 to bank. So 80,000, 20,000 and 20,000. Being application money transferred. Fifth, now after application 2 entries, allotments 2 entries. Allotment includes premium, so equity share allotment account debit to equity share capital account to security premium account. Now amounts, equity share allotment, total 40,000 shares are allotted and allotment money is 15 rupees. So equity share allotment account debit with 40,000 into 15, 6 lakhs. Now out of 15 rupees, 3 rupees is towards face value. So 40,000 into 3, 1,20,000 to equity share capital account and 12 rupees is premium. So 40,000 into 12, 4,80,000 towards security premium. Okay, you all can see here 3 rupees face value will go to share capital, 12 rupees premium will go to security premium. Being allotment money due. Now, fourth entry, after that receipt of allotment money, do we have calls in arrears? Yes, Preet has not paid 1600 allotment money. So, single entry or combined entry? Combined entry. Bank is the receiver, debit the receiver, bank account debit with the money received. Calls in arrears are still receivable, debit the receivables. So calls in arrears account debit with the money not received. And to close equity share allotment account, we will reverse and credit to equity share allotment account. Now amounts: allotment 6 lakhs minus 20,000 surplus is already adjusted. So now we have to receive what amount? Only 60,000 minus 6 lakhs minus 20,000, 5 lakh 80,000. 6 lakhs minus 20,000 of surplus is already adjusted. Calls in arrears, all of you look at this. Preet's calls in arrears are 23,200 in working note 3. Directly from working note 3, 23,200. Okay, we have done special calculation for that. That 800 surplus he has already paid with application, which is going to get adjusted with allotment. So 24,000 minus 800, 23,200 are calls in arrears. And 5 lakh 80,000 minus 23,200, so 5 lakh 56,800 is the money received, being allotment money received. Now two entries of allotment are done, two entries of first call. Equity share first call account debit to equity share capital account. Now 40,000 shares are allotted, okay, overall, and allotment, sorry, first call money is 3 rupees. So 40,000 into 3, 1,20,000. Being first call money due. Next entry. Next entry. First call money received. Okay. Now again combine entry, because in first call also we do have calls in arrears. So bank account debit. Bank is the receiver, debit the receiver, bank account debit. Calls in arrears are still receivable, debit the receivables. So calls in arrears account debit to equity share first call account. Now for the amounts we will go reverse. So first call account we will credit with full amount 1,20,000. Calls in arrears, directly from the first workings we can get what amount? First workings, 2400 shares into 2 rupees, 4800. Okay. Sorry, here it will be 3 rupees, not 2 rupees. 2400 into 3 rupees of first call. So 7200. And 1,20,000 minus 7,200, 1,12,800 being first call money received. So 2 entries of first call are done. Now 2 entries of final call. No, all of you, have you passed 2 entries of final call? Then it's wrong. After first call, forfeiture of Preet's shares. Okay, forfeiture of Preet's shares. Okay, forfeiture, which two accounts debit, which two accounts credit? Share capital debit, security premium debit. Calls in areas credit, forfeiture credit. Will we debit security premium? We have to cross verify. We will debit because right now we are passing the forfeiture of Preet's shares entry and Preet has not paid allotment money on 1600 shares. Allotment includes premium, so Preet has not paid premium also. Premium is not paid by the shareholder, so security premium will also get debited. Equity share capital account debit. लेक्चर रिकॉर्ड कर रहा था मैं फोन करता हूँ करके रिकॉर्ड. बाय. Equity share capital account debit. Security premium account debit. To share forfeiture account. To calls in arrears account. Now equity share capital account debit, number of shares forfeited, that is 1600 of Preet into called up capital 8. So number of shares forfeited 1600 into called up capital 8, 12,800. Security premium, number of shares forfeited 1600 into premium not paid is 12 rupees. Okay, premium with allotment is 12 rupees which is not paid. So 1600 into this 12. 19,200. To share forfeiture account working note 4. Preet's forfeitures is directly this 4,000 which Preet had paid actually on 2,000 shares. So from working note 4 directly 4,000. And calls in arrears is important, be attentive. Only Preet's calls in arrears are to be taken. We are passing this entry to forfeit 1600 shares of whom? Preet. So see here. Are this 23,200 calls in arrears of Preet? Yes. These are of Preet's 1600 shares only. Here we have done the calculation. This 23,200 are calls in arrears of Preet only. Okay. But are this 7,200 all of Preet? No. This 2,400 includes 1,600 of Preet as well as 800 of Meet. Okay, 2,400 calls in arrears include 1,600 of Preet as well as 800 of Meet. So out of this 7,200, what would be the calls in arrears of Preet? 1600 into 3, 4800. Okay, so basically this 23,200 are allotment calls in arrears of Preet, plus this 1600 into 3, 4800 are calls in arrears of Preet in first call. So 23,200 plus 4800, 28,000 are calls in arrears of Preet. So here we have to include forfeiture entry of Preet, means all calculations to be done for the 1600 shares of Preet only. You can cross check. 12,800 plus 19,200 is 32,000. 4,000 plus 28,000 is also 32,000. Being 1600 shares forfeited. Okay, being 1600 shares forfeited. Now after forfeiture, two entries of final call, because reissue is done after final call. So two entries of final call will come. Equity share final call account debit. To equity share capital account. What amount? 40,000 shares are allotted. So will we calculate this on 40,000? Now you all must be knowing this. Since 1600 shares are forfeited but not yet reissued, 40,000 minus 1600. Now this final call money will become due only on 38,400 shares into final call is 2 rupees. So 38,400 into 2 rupees. Okay. That comes to 76,800. So be careful, lot of practice is done. Previous question also we had done this point. From 40,000 we will minus 1600 shares of Preet which are forfeited. Okay, same shares we have to minus here because the amount will not become due on these shares. So 38,400 into 2 being final call money due. Then final call money received. Calls in arrears are there of Meet now in final call. So again combined entry will come. Bank is the receiver. Debit the receiver. Bank account debit with the money received. Calls in arrears are still receivables. Debit the receivable. So calls in arrears account debit with the money not received. To equity share final call account. Now amounts we will go reverse. So final call very first you'll credit with 76,800. Calls in arrears. Now directly we can do it here. 800 into 2. Final call, what are the calls in arrears? 800 into 2, 1600. And 76,800 minus 1600. So 75,200. Being final call money received. Now after final call again there is forfeiture of Meet's shares. Okay, 800 shares of Meet are forfeited. So two accounts debit, two accounts credit. Equity share capital and security premium debit, just now we did that. share forfeiture and call scenarios credit. However, security premium we have to debit only if the premium is not received. Meet has paid the premium. Meet has not paid which installments? First call and final call. Premium is with which installment? Allotment, that is paid by Meet. Since premium is received, security premium will not be debited. So only equity share capital account debit and then directly to share forfeiture account and two calls in arrears account. Now keep this in mind. This entry is for 800 shares of Meet. Okay, this entry we are passing for 800 shares of Meet. So number of shares forfeited 800 into called up capital after final call is 10 rupees. So 8,000. Okay, we have written here called up capital is 10. Then share forfeiture of 800 shares of Meet is 4,000 rupees. So to share forfeiture account working note 4 on 800 shares it is 4,000. Now call scenarios, be careful, we have to take only of 800 shares. So as I told you, here Meet's 800 shares are also included in this call scenarios. So what are Meet's call scenarios in first call 800 into 3? Here also you can directly get it. What are Meet's call scenarios in first call 800 into 3, final call 800 into 2. Okay. So call scenarios of Meet 800 into 3, 2400. These are first call scenarios. And final call directly these are of Meet only. These all 800 shares are of Meet only. So directly we can take this 1600. So 2400 plus 1600, 4000. You can cross check 4000 plus 4000, 8000. Being 800 shares forfeited. Now, after forfeiture, reissue, bank is the receiver, debit the receiver, bank account debit, share discount, we will utilize from share forfeiture. So share forfeiture account debit to equity share capital account. Now amounts, how many shares are reissued? See the last paragraph. 2000 shares in all are reissued and reissue price is 9 rupees. So number of shares reissued 2000 into reissue price 9, 18,000. Discount is 1 rupee if 9 rupees is the reissue price. So number of shares reissued 2000 into discount 1, 2000. And called up capital 2000 into 10, 20,000. Being 2000 shares reissued. Now after the reissue, last entry is for profit. So 12th entry, share forfeiture account debit to capital reserve account. Now amount of profit, be careful. Since 2000 shares are reissued, profit will be calculated on same 2000 shares. So how will you find the profit on this 2000 shares? The formula is amount forfeited on reissued shares. So here we discussed that the 2000 shares which are reissued, the whole of Mr. Preeth's shares being included, means in that 2000, 1600 are of Preeth and only remaining 400 are of Meet. So what is the amount forfeited on this 2000 shares? On 1600 shares of Preeth, the amount forfeited is 4000. On 400 shares of Meet, the amount forfeited is 2000. So this 4000 plus this 2000. What is the amount forfeited on this 2000 shares? 4000 of Preeth plus 2000 of Meet. Okay, that is the reason we do this bifurcation over here, reissued and not reissued, so that it helps, this bifurcation always helps us in finding the amount of profit. Okay, so 1600 shares of Preeth are reissued, 400 shares of Meet are reissued. On 1600 shares of Preeth, amount forfeited 4000. On 400 shares of Meet, amount forfeited 2000. So what is the amount forfeited on this 2000 shares? 6000. Okay. From that, we have to minus the discount. Now this discount of 2000 shares is 2000 only. So 4000 plus 2000, 6000 minus 2000, 4000. What is the profit on reissue? 4000. Being profit on forfeiture. Okay. Now, total formality wise, total is to be done. So what are the totals? 10,000 plus 5,000 plus 1,20,000 plus 6 lakhs plus 5,80,000 plus 1,20,000 plus 1,20,000 plus 32,000 plus 76,800 plus 76,800 plus 8,000 plus 20,000 plus 4,000. 17,72,600. So one more similar question is given in the homework in the timetable. All of you try that on your own. Okay. Check it up in the timetable. Maybe only one question is to be done, but all of you must be able to try this question. If not clear, then repeat and revise it again. Okay. So that will be all for this lecture. Bye everyone. Take care. See you in the next lecture.